And John, I guess what's working right now would be the big oil companies, both Chevron and Exxon out with incredibly strong numbers on Friday.
Yeah, Becky, they killed it, and good morning to you on Friday. Both of them doing everything you'd want as a shareholder in terms of announcing stock buybacks, holding the dividend, paying down debt. And there's still a good buy. Both companies stock prices have just about doubled in a year's time. Of course, last year was horrific. That old adage about buying when there's blood in the street, paid off for you if you had the nerve back then to go into these shares, because they certainly had a heck of a run here. Right now, if you still buy them with the oil prices $84 a barrel, that hasn't even hit their bottom line yet. The most recent part of the crude oil rally was in this newer quarter. So, you're still going to have the benefit of incredible profits for both companies. Both pay a great dividend. Chevron's around 4 and 6.5%. Exxon's still over 5% dividend. So, and given their incumbency, I'll call it now, because it's hard to break in, and they bought up so much of the Permian, just those two companies, they're in control here. And since there's matter of fact, there's a disincentive to drill from outside, pressures. The portfolio of natural gas and crude oil that they have is only going to increase in value here now as we go forward.
Hey, John, part of what you pointed out is the increases to the dividend, the stock buyback programs that both of those companies announced. For Exxon, it was the first time in quite a while that they talked about a stock buyback. I mean, those are big deals, but those are things that's giving money back to the shareholder. It's not necessarily reinvestment or looking for more exploration. Are we going to continue to see these higher oil and gas prices because you're not going to have big companies like these kind of putting as much into exploration as they had in years past, relatively speaking, in terms of CapEx?
Yeah, I think so. I mean, in the past, Becky, in the recent past, we would have been criticizing them for not replacing their reserves and really doing hard number checks and drill downs, pardon the pun, on them to ask and inquire as to, what are they doing? You're not keeping up and not being able to continue to be able to, produce these returns. But I want to point out one other thing in terms of this return to shareholders. There was concerns about both of these companies last year, whether or not they would maintain their dividend. Mm-hmm. Both of them went to the mat to do it. Exxon itself borrowed billions to do it, and now they're paying back those loans. So I think if you ever had to worry about them paying those dividends in the future, that's out the window. So again, I would highlight the high dividend yields both of these stocks have.
Shepard Smith here. Thanks for watching CNBC on YouTube.